Right. So, hi, good evening, everyone. So I want to wish you guys a very warm welcome to this webinar. This would be maybe our third or fourth webinar for the year. And in this webinar, it's going to be a very valuable webinar where we're going to talk a little bit about how to invest, or we're going to talk a little bit about getting some ideas or getting some investment ideas on how to invest in the oil and gas industry. So just a quick intro about myself. That's me, where I worked for about 20 years within the financial industry, where I initially worked as an analyst. Sorry, I initially worked as an accountant, where I worked as an accountant for 3 years in one of the big four companies. Eventually, I worked my way up and I joined the investment banking industry. And during my tenure in the investment banking industry, I was there for about 15 years. And during that time, I was an equity analyst. And what equity analysts does is that we help pick stocks for fund managers. Basically, we go on the ground, try to find stocks which are undervalued, and we will introduce these stocks to our fund managers, and then they will invest in these stocks, right? And then right now, I'm actually doing customer outreach, where if any of you, sometimes when you come on the chats or when you want to talk to a rep from MIDF Invest, sometimes that could be me. And on top of that, since I have all this experience with regards to the stock picking and also how to find undervalued stocks, so hence I'm actually helping teach a little bit about financial literacy. So a little bit about the webinar. This webinar, basically, right, we are going to have this webinar very relaxed, right? And since this is an interactive webinar, if you guys have any questions, please do ask me, right? Just look at this as like a virtual classroom where the interaction will be easy, right? And if you guys have any questions, do ask. I can stop and I can explain certain points, right? On top of that, every once in a while, maybe I'll ask you guys some questions, right? There's nothing worse than listening to a lecture for 1 hour and it's only one way, right? So hence, that's one of the reasons why we are doing this webinar. So it's live, it's interactive, and we get to maybe talk and also maybe improve ideas. And also sometimes, I may explain things a little bit too fast. So this is a good opportunity. If you guys have questions, I'm sure other people will have the same question. So, feel free to always ask me questions, right? And I guess before we start, right, just maybe out of curiosity, tell me, how much of knowledge or how much of information do you guys know about the oil and gas industry? That's my first question for you guys, right? Say, if you guys have a lot of knowledge, just say yes. If you're first time listening about this industry, just say, I guess no, right? Second question I have for you guys is this your very first webinar, right? So I'll just wait for a while, wait for the chats to come in, see whether it works, right? Right. Well, I'm waiting, I guess. So I think what we can do is, I think every webinar should have a theme, right? And in this, the theme of today's webinar will be pretty much talking about the oil and gas industry, right? And I think more importantly is that all of these webinars, right? What we want to do is to enable you guys to actually have better ideas, right? And every time when we have knowledge, this will enable us to take better action, right? And what we want to do in this webinar is to give you guys some guidance and also some pointers with regards to the oil and gas industry. And our hope is that you guys will have a very profitable journey for 2023, right? So that's one of the reasons why we're having this webinar. Cool. So there is I guess, an anonymous attendee which says limited knowledge, first time. Thank you so much for answering, right? So at least we know how to actually deliver this webinar, right? So I'm going to go, since this is an introduction with regards to the oil and gas, we are going to go step by step, right? And hopefully by the end of this webinar, we can give you some investment ideas, right? And hopefully some actionable items where you guys can take and hopefully make some money off certain trades, right? So that's the I guess, the objective, right? So basically, the webinar from the top, right? A little bit about what we're going to talk about, right? So we're going to break this webinar up into 3 big segments. The first segment we're going to talk a little bit about is the inflation and also the pandemic, right? So what happened during the inflation and what happened during the pandemic? We will look at it from a Malaysian standpoint of view, yours and my pocket, right? Basically inflation, right? Everything gets expensive and what can we do? And the second thing which I would like to talk about, right, which not many people talk about, is that at this point in time, with market volatility, has it been easy for you guys to invest and navigate your portfolio or how you guys invest? Because as of right now, we could see that the tech sector and a lot of tech stocks actually was relatively volatile during the past 2 or 3 years, right? So we are going to address that issue, right? Number one, we're going to talk a little bit about, the volatility of the sector. How does one invest? Number two, how to get better returns from your investment. And the third thing we're going to talk a little bit about is an introduction to the oil and gas industry. And finally, we're going to talk a little bit about this particular investment strategy that we thought of, and we're going to share it with you guys, right? Right. So basically, during the past 5 years, right, we can see that the KLCI, right, you can see this this arrow right over here, right, this orange arrow, right, during 2020, right? Any guesses as to why KLCI took a major dip? Any guesses? So no idea at all. Oil and gas share tradings. Yeah, so that's one of the reasons why. Thank you, Mr. Siva. So we're going to talk a little bit about oil and gas, and I want to teach you guys the step by step. We're going to make it very, very, easy and as very fundamental, right? So at least we can all get ideas, right? So basically, as I was mentioning, during 2020, what happened was there was a big dip in the market. So, and if any of you guessed that that was during the pandemic, you guys are right, right? What happened was the market actually took a major dip and everyone was very cautious at that point in time, right? The whole world was going through a global pandemic. And what happened was a lot of businesses suffered as a result of that, right? So basically, when people cannot go out, they cannot interact with businesses. And when businesses do not interact with people, what tends to happen is profitability of a lot of these businesses would drop, right? So at this point in time, I'm sure a lot of us remember, right? First time in my life, I had to actually stay home for months, right? And not go out, right? So at this point in time, I still, the stock market was relatively sold down, number one. And number two, at that point in time, many people were at home, right? So many people were trying to figure out ways to, try to increase their income. And one of the ways which actually a lot of Malaysians actually ventured was investing in the stock market, right? And out of curiosity, how many of you guys out there actually invested within the glove sector, right? So just out of curiosity, you can just put yes if you guys invested in gloves, or just type gloves so that I know how many of you actually invested in the glove sector, right? So at this point in time, 2020, you could see a major sell down, right? And then what happened was, at this point in time, the demand for gloves were relatively high, and there was actually you can see a lot of glove stocks actually rose quite significantly, right? But having said that, like I said, we could see that there was a major sell down in terms of gloves. However, if we were to look at our markets, right, we could see that after the sell down for 2020, the stock market actually went relatively sideways. It recovered a little bit and it went relatively sideways, right, during the past 5 years. So basically, the story is there was a pandemic and there was also a recovery within our local KLCI. However, if we were to look at the tech sector, right, we could see that, however, if we look at the tech sector, we could see that if you guys can see the orange bar, right, or the orange arrow, it's actually pointing upwards, right? And that stock is actually Tesla at that point in time. And if we were to compare what happened in the Malaysian market versus what happened in the markets over in the United States, we could see that over in the US, right, a lot of tech stocks, in fact, a lot of stocks did very, very well, right? And part of the reasons why a lot of these stocks did very, very well was that the government actually did cash handouts and also bailout. And while doing that, they had to print some money, right? So we could see that a lot of this money, what right now is actually invested in stocks, right? And then eventually it actually dropped, right? That's with Tesla, right? And if we were to take out Tesla, we could see that even the other tech stocks like Apple, Microsoft, Google, and Meta, right? A lot of them actually went up during 2022, right? And as of the end of 2022, we could see that there was a major sell down, right? So basically, with a lot of money being printed, right, we could see that this actually helped the markets over in the United States. But having said that, over in Malaysia, when there is a lot of money being printed, paper money will be less valued, or it will be value less, right? Because, and part of the reasons for this, right, and proof of this is that if we were to look in Malaysia alone, we could see that prices of a lot of things, food prices like meat, right, vegetables. If you look at the chart on the right, the bar chart, we could see that this is 2022 alone, right? We could see from January to August, we could see that prices of meat actually rose by 9.2, right? And August per se actually rose by 9.9, and then, and onwards, right, it's actually 12%, right? These are food items, right? And I'm sure at that point in time, last year, I don't know whether you guys can remember, prices of chili went up quite significantly, right? Prices of roti canai also, right? That's a Malaysian favorite food, right? And also prices of nasi lemak, right? So, I mean, we could see during that year, we could see either the size of our nasi lemak shrinking, or the size of our roti canai shrinking, or the prices actually go up, right? So that's how a lot of vendors pass their costs to us people, right? So that's the impact of inflation. And if we were to look in 2023, we could see that the prices of a lot of vegetables this year alone, between January and February, right? So this is what I got from the Star, right? And if we think that with 2022 ending, that will be the end of the inflation nightmare, right? But yeah, I'm sorry to tell you guys, right? Looking at 2023, right? I got this from the Star, right? And the Star actually got this from the KL wet market, right? The traders, And if you look at the prices of timun or cucumber, right? It rose from 180 to 650. So it's a bit more than 200%. So right now we can see that inflation things are getting very, very expensive. And the way to protect our wealth is by investing, basically, right? So what we want to do is if we put our money in FD, right? If the FD is giving us about 4%, while prices of food is getting maybe on average 30 to 40%, right? Our wealth is not catching up with the inflation that's happening around. So now let me show you guys another chart, right? Over here, we can see that in Malaysia, right? I got this from our research department. We could see that from 2021, we could see that the prices of transport and fuel. Transport rose by about 11% and fuel rose by about 21.5%, right? So, and during this time, what happened was there was a conflict between Russia and Ukraine. So, with the printing of money, with the conflict between Russia and Ukraine, we could see many things actually getting more expensive, right? So part of the reasons why we are having this webinar, right, is to talk a little bit about, instead of getting scared of the next inflation, why not invest in things which will benefit from the inflation? Let me repeat this because this is very important, right? Instead of fearing the inflation, why not invest in companies that will benefit if there is an increase in prices? And hence, we are having the oil and gas webinar today, right? So you can see that, I think the next chart actually even tells a better story, right? You can see in terms of RON 95, right? Basically what this chart is saying, RON 95 and also the CPI. CPI actually measures the inflations for us fellow Malaysians. You will notice that it's actually highly correlated, right? In a way that if RON 95 naik, our CPI naik. If RON 95 turun, our CPI turun. So basically what this is trying to say is that it has a very high correlation. Should harga minyak naik, our cost of living will also naik, basically. And should harga minyak turun, it will turun accordingly. So the next question is like, wait a minute, how about food prices? How does fuel impact the prices of food or the prices of all the groceries that we get from the market, right? So the analogy over here is that if a fisherman were to catch fish, say somewhere in maybe Kuala Selangor or maybe somewhere in Terengganu, right? Or a farmer were to grow rice in Kedah, right? It does not come straight to the super, in order for all of these products to come to the supermarket and in order for us to actually purchase these products, it will need to go through someone to drive it or a transportational company, right? And this transportational company would use oil and also gas to move their vehicles around Malaysia so that they can get the products onto our house, into our table, right? For us to consume. So if we look at this particular chart over here, food makes about 30% of our inflation, or it measures 30% of our overall inflation. Look at transport and also fuel. That also measures about 23%. Overall, that makes more than 50%, right? So we can see that if prices of fuel were to go up, that will impact the prices of food, right? And if prices of food and fuel were to go up hand in hand, right? Basically, that's pretty much our expenses, if you think about it, what we really spend on a day-on-day basis, right? I know for me, at least, a big chunk of my daily expenses will go into food, right? So right now, again, as I mentioned to you, with regards to crude oil prices increasing, right? And also inflation being about 20 to 30%. If you look at our traditional assets, right, our ASB, if we can invest, if you guys can invest in ASB, the returns this year is about 4.5, right? EPF, on the other hand, is about 5.35 for the conventional and 4.75 for the Sharia. KLCI, I just looked at it this afternoon, right? I took a 5-year measurement of KLCI. I got an average return per year of negative 4.9%, while the S&P is about 7 to 8%. So if you guys are struggling with regards to getting returns, you know, it's not an isolated issue. Everyone within the financial industry or everyone that's investing right now are also facing the same thing, right? So when we thought about how to actually hedge our portfolio against increasing prices, that's one of the reasons why we thought of investing in oil and gas, basically, right? And that's the basis of this whole webinar, right? So right now, again, if we were to invest in, say, ASB, or if we were to invest in EPF, right, say it gives us about 4 to 5%, right? And again, I'm pulling out this chart again to look at the performance of a lot of technology type stocks. And I'm sure you guys can see that there was an increase, a significant increase, right? And then it actually went downwards in 2022. Towards the end of 2022, then there was a major sell-off, basically, right? Except for maybe Apple. Apple looks relatively flat, but the other guys, they had a sell-off, right? So really, again, the question is, if inflation or if things around us are getting expensive, if food is increasing by 30 to 40%, right? And if our returns on assets is about 4 to 5%, and if we even invest in stocks, the performance is like this, what can we do, right? So I think towards the end, I'll show you a graph, and it shows how stable the returns for the sector, basically. So like this guy over here, right? I'm sure many of us have this problem, you know, inflation, return of assets, you know. So, you know, how to combat this issue? So we'll get into the oil and gas, webinar, right? Let's get deeper into it now. So pretty much one of the reasons why I like the oil and gas sector, I'll give you a catalyst on why the sector is maybe a good sector to look at, right? So I see a question, just give me a second, right? Which sector is suitable for investing during instability of economy and political? Thank you, Wan Muhammad. So this sector will be one of a good sector, basically, and I'll tell you guys why towards the middle of the webinar, right? I will show you also why, right? And with the Silicon Valley Bank and also the Signature Bank, with news of this instability, right? I'll also show you why this sector would be even a better sector to invest in. Thank you so much for the question. So to answer you in short, yes, this sector, oil and gas. So pretty much why I think the oil and gas sector, these are the catalysts for the sector. So there are 3 catalysts. The first catalyst, right, is that right now with the borders opening, right, everyone can suddenly travel. Everyone can fly. Everyone can go out their house. So imagine before this, right, everyone just cannot go out their house, right? Everyone was stuck. Everyone cannot travel. You know, in order for us to buy food, it was, you know, I'm sure if you guys can remember, wherever you are, maybe in Kuala Lumpur or maybe in Selangor, or if any of you are listening somewhere outside of the Klang Valley, maybe in Perak or maybe in Kelantan or Terengganu, right? I'm sure there was a time when during the whole lockdown, there were literally no cars around all of us, right? And it felt really surreal, basically, right? So when cars don't move around and when we cannot travel, the demand for crude oil actually dropped, right? And with that, right now, with the opening of the country and with the lifting of the PKP, and also with the opening of borders, all of a sudden we can see more and more people moving. And when more and more people are moving, this sector would benefit because transportation will need crude oil or petroleum products to move the vehicles all around. And because there is a pent-up demand, so that means kalau tiba-tiba, right, it's like last year, I don't know whether you guys remembered, when during Raya kan, as soon as they lifted the PKP, everyone started traveling. I think the whole of Malaysia actually started traveling, right? So when the government actually disallowed people to travel, once it opens, right, it's pent-up demand lah. Tiba-tiba, the demand will come up very quickly or very fast, right? So that's the first thing, right? On a side note, I just want to curious lah, if any of you guys actually invested in the airline stocks, right? Maybe AirAsia or AirAsia X, right? You could see that I think last week AirAsia X rose by about 40%. So yeah, and part of the reasons why, again, as I mentioned to you guys, is the pent-up demand, right? So right now, many companies and many people are starting to travel, right? The second reason why we like this sector is that it is necessary for us to consume petrol. And let me give you guys a story, right? In the morning, right, when we wake up, right, say we go, we have to brush our teeth, right? That toothbrush that we are using is made out of plastic. And plastic, the raw material for plastic is petroleum products, right? Then on top of that, assuming if we, from our house, we have to drive to the office, right? We need to use transportation, right? And even driving from location A to location B, we need to use petrol, right? To actually move the car, basically, right? And then during lunch, we eat our food. And as I mentioned to you guys a bit earlier, right? The food products that we eat, right? A lot of it, you know, like the padi has to come from maybe Kedah, and then, you know, the fish may come from Kuala Selangor, right? The sambal may, you know, the chili may come from another place, right? So in order to even eat our food, right, we still need to use fuel, or we need to use crude oil to actually move the products so it comes on our table. And finally, whenever we turn on the lights, we turn on the fan, and in fact, this webinar, right, is also powered by energy, electricity. And one of the feedstock for electricity and also energy is gas, right? So both oil and gas, it's like the beating heart of the modern world. So no matter what, right, people will have to demand this particular product. The next thing is that the next reason why we like the oil and gas industry is that the financial, if we look at these sectors, right? If we look at the companies, right, that actually is involved in this sector, especially the big blue chip guys, right? We can see that they are financially strong, number one. Number two is that they have a strong cash flow, especially right now. And number three, there is a constant demand, right? If we try to remember, right, quite recently, what happened was Petronas just announced their yearly results for 2022, and Petronas results from 50 billion went up to 100 billion, about 100 billion. So right now, why don't we get a part of the action, right? And how we can do this is investing in the sector. So basically, when breaking down the sector, right? Sorry, is there any questions before we continue? Because I know I went to I went a bit technical. So if there's any questions, please do ask, and then after that I can continue. If there's none, I'll continue. Right. Okay. So I'll continue, and should there be any questions, I'll read the question out, and then after that we try to answer it. Okay. So now breaking down the oil and gas sector, right? We can break it up into three major areas. Right? Let me repeat that again. This is very important. It's going to get a bit technical now. So when looking at the oil and gas sector, it can be divided into three major areas. The first area would be the upstream, right? So for this, let us imagine a small little stream from a mountain. So this stream is flowing down, flowing down, flowing down, right? So on the top of the mountain, right, is the upstream. That is where the source of water will come from, right? And then the midstream is somewhere at the side of the river, in the middle of the river, and the downstream is at the bottom of the river. So upstream is basically the source of crude oil. This is where crude oil actually comes out, right? The energy over here. Midstream is how crude oil will get processed. So it's not that after when we pull out the petroleum products of crude oil, right, we can actually pump it in our car. It needs to go through some form of refinery, right? It needs to be refined so that these products is safe to use in jet fuel, in our car, kerosene, and so on and so forth, right? So the midstream is to process the raw crude oil into products, into different types of products, right? And the downstream is products that we use on a daily basis. As I mentioned to you guys, if you go to a petrol pump, and if you go to maybe like a petrol station, right, that is the downstream, right? So I see a question. Do you consider the ESG aspects? Thank you, Andy, for the question. So ESG looks at the environment, social, and also governance, right? And at this point in time, we can see that a lot of oil and gas players, right? They are trying to move into the energy sector, which is also renewable energy, right? So not all oil and gas industries are bad for, I guess, the environment. Some of them could maybe move into renewable energy, right? And they are actually making efforts so to be more ESG compliant, right? On top of that, we can see that more oil and gas companies, they are hiring locals, and also they're hiring women into their workforce, right? So that will be good for the society as a whole, right? In fact, even in Malaysia also, they train a lot of local engineers. If they are maybe Shell or Exxon, right? They train a lot of local engineers so that we can be global champions ourselves, right? So some oil and gas companies are moving more and more towards the ESG space. Thank you for that question. So, right. The next thing is, as I mentioned to you guys, upstream, midstream, and also downstream, right? So over here, I pulled out a picture, right? And in this picture, we can see that a lot of upstream, right? These are machinery to extract oil from the ground, right? So how the very first step in order for us to get any crude oil, right? We need to look at the geographical area, right? And then from the geographical area, we start digging and digging and digging. And then once we start digging, assuming that particular place has a hydrocarbon reserve, right? Or a place where they have crude oil. So once you actually dig, right, you need to make sure there's enough pressure so that the crude oil will come up. So that's the upstream. The midstream, as this picture shows, this extracted by my colleague, right? So over here, we can see that with regards to midstream, this would be the storage and also refining of products, right? And then comes the downstream, right? At the very right, you can see this is what we use on our day-to-day to power our houses, you know, to drive our cars, to you know, power factories, and these factories actually produce goods. So no matter what, right, this resource is very necessary, and no matter what, people will still have to consume it, right? So that's why we like the sector. So with regards to the upstream, right? So let me just go a little bit more technical over here, right? Upstream, what needs to happen, right? Or what tends to happen in the upstream is that there will be exploration and production, right? So again, as I mentioned to you guys, right? Over here, assuming, just out of curiosity, have anyone maybe went around PD, right? Have any of you guys ever seen an oil rig over in PD, or somewhere around the Malaysian coast, right? Have you guys ever seen like a little rig over there, right? So these rigs, right, are actually involved in the upstream, right? And the activity before we extract petroleum, we need to first explore, right? So the oil majors over here, right, what they do is they will look at the geographical area. They will see, and they get a lot of geologists for this, and these are all very specialized people, right? They will try to look at the formation of the ground and whatnot, right? And then after that, they say, maybe this is a very good place to actually start drilling, right? And maybe a lot of these companies, right, what they do is they drill and then see whether there's any oil reserve. They drill and see whether there's any oil reserve, right? And should they hit the oil, right, that's where they start the production of oil. So this is upstream. And why this is important, right? Okay, this is very, very important. I'm gonna just slow down a little bit. Why this is important is that when prices of crude oil increases, the upstream oil and gas players would benefit from this. Okay, let me repeat this again. When crude oil prices increases, the upstream players would benefit from this. So every time when there's an inflation, the upstream oil and gas players tend to benefit from this. Why? Because when inflation happens, crude oil prices gets more expensive. When crude oil prices gets more expensive, the profit for a lot of these upstream guys would be much higher, right? So as I mentioned, okay, over here, the next thing is that this is one of an oil rig, right? And this is a very popular structure over in Malaysia, right? There's a small little helicopter that comes every once in a while, right? To drop people off. Just I guess a fun fact lah. I used to be an oil and gas analyst many years ago, and one of the things about taking a helicopter and going onto the helicopter pad, right? You need to be a certain weight lah. So yeah, I didn't meet the weight qualification, so I couldn't quite go on the platform. But basically, what this platform does primarily, especially in Malaysia, is that they extract crude oil, right? And before this, a lot of crude oil in Malaysia, you can get it very close to the shore, right? This is called shallow water. So when they extract oil from the shallow water, it is cheaper to extract that oil. Why? It is much closer. and it has less risk to Mother Nature. Right now, when we have to go to deep water and ultra deep water, the extraction is more expensive. So therefore, prices of fuel will be a bit more expensive, right? So these are the catalysts for crude oil, right? So number one, as I mentioned to you, if there's an inflation, this will benefit the crude oil guys. The second thing, to extract crude oil is getting more and more expensive. So therefore, crude oil cannot be sold any cheaper, right? So the next players are the midstreams. These guys are, as I mentioned, what they do is they store petroleum products and also they refine petroleum products, right? And every time when we extract oil, right, it needs to be put in a certain container, basically, right? So the oil will keep on coming out. So it will cost a lot of money to shut down the rigs, right? So what people tend to do is they don't, it's less profitable for people to shut down the rigs than and then eventually turn it on when fuel prices actually goes down. So what they tend to do is, like, if fuel prices were to go down, they just store it. Basically, they store it, and then some of the people just wait for crude oil prices to go up a little bit, and then this middleman will sell it at a much higher price, right? But as I mentioned to you, for the upstream guys, if they were to close the tap, it'll be more expensive, right? And eventually opening it. So when crude oil prices goes down and comes up, right, it does not make sense for them to turn on and turn off the tap. So what they have to eventually always do is make sure that it's always producing. And when you're always producing, you need to have a storage, right? And this cylinder, right, is where people actually store their crude oil, basically, right? And another thing is you need to also move your crude oil. Say, assuming if your rig is in the middle of the ocean, right, deep water or ultra deep water. So a lot of these big ships needs to go to the rigs to siphon out oil from the rigs, and then they bring the big ships will start. They will bring the petrol to a tank terminal, right, and the resource or the crude oil will be siphoned out from these big ships into a big storage, right? And as I mentioned earlier, it does not make sense to turn on and turn off the tap, right? So these rigs will continuously create petrol, right? Or will continuously pump out petrol, right? And the second thing of what a midstream does is they do refinery, right? So over here, amongst the products that we can get, just a fun fact, basically, the heavier the crude, right? They use it for very, I guess, the heavier the crude, the darker the oil is, basically, right? And one of the usage of heavy crudes is our tar. So when you look at the roads, right, you can see it's stone and also a black liquid, right? And that black liquid is actually tar, so to actually tar our roads, right? And then as the process, or as the boiling process goes higher and higher, you get lighter petroleum products. And one of the lighter petroleum products are jet fuel. And that's one of the reasons why jet fuels are relatively expensive when compared to diesel. Diesel is considered quite heavy also. Your RON 95 and 97 are in the middle, but your jet fuels are on the top, on the light side, right? So if it's light oil, it is more valuable. And as a fun fact, right, over here in Malaysia, we produce tapis, and tapis is light crude oil. And with Malaysia's crude oil being a bit more valuable, that's one of the reasons why we can hear that Malaysia tends to sell its crude oil, and then they import cheaper oil for the people, right? So let me repeat this again. This is important, right? the crude oil that comes out from Malaysia is light crude oil, and light crude oil is more valuable, right? And we as a country, we sell our crude oil, but at the same time, we import crude oil, right? The heavier crude oils. And this crude oil is primarily used for raw 95 and 97, right? So that is a tank terminal, right? And if you see that long pipe, right, this is where the big container ships will come and they will siphon out petrol from the structure deep in the ocean. So they will carry the crude oil, they will bring the crude oil to the tank terminals. And then over here, you can see the long pipe, right? The next question is why the pipe is this long, basically. So basically, because this tank terminal, these ships are very heavy, right? You need to actually have a certain depth in order for you to actually yeah. So the tank terminals, they need a certain depth. So that's one of the reasons why your pipe has to be a bit on the long side, so to meet the big crude oil tankers, right? So again, so if you notice a long pipe, right? So they will siphon all the oil, and most of the petroleum products or crude oil products, right, will be kept in these tank terminals, right? So I see a question over here. So what types of class oil does airlines use to move? So the type of, they call it jet fuel, basically, right? They call it jet fuel. And at one time, there was a time now where jet fuel was, or crude oil was actually close to $100, right? And even Air Asia did some hedging and whatnot. So crude oil actually, if this is what I used to do when I was an analyst now, right? If crude oil prices goes up, right? Who will benefit is the crude oil guys, right? Because, you know, they sell it at a higher price, right? But if crude oil prices goes down, who will benefit? If you guys guess transportation guys, you're right. So if crude oil prices were to go down, a lot of airlines would have better margins. And when they have better margins, this will translate to an increase in value for stockholders. So back when I was an analyst, what I used to do is I just look at crude oil prices. So crude oil prices goes up, I buy oil and gas. If crude oil prices goes down, I buy airlines. It's a very simple strategy. But all you have to do is really look at the cycles for crude oil, basically, right? Thanks for the question. Thanks for the question. So we are moving towards downstream, right? So downstream is what people use on a daily basis, right? So every time when we leave our house, right, we take our cars, right? Sometimes when when our car does not need or when our car needs a petrol, right? This is where we will go to a petrol station, basically, right? And amongst the popular petrol stations over in Malaysia, Petronas, Shell, right? And how a lot of this petrol station makes money is based on the volume of people pumping petrol, right? It's based on the volume of people pumping petrol, right? So in Malaysia, if we look at this company called Petronas Dagang, right? It's basically the company that owns the petrol pumps, or they own a chain of petrol pumps all around Malaysia, right? And we need to look at the volume of petrol that is being pumped. So over here, what I'm basically trying to say, in very simplistic terms, if prices of crude oil were to go up to maybe $100 per barrel, the downstream guys do not benefit from this. Let me repeat this again. This is very, very important. If we want to invest and hedge our portfolio against inflation, and if we are taking a bet that crude oil prices will go up, right? But if you buy the downstream guys, right, that will not be it won't match, or this trade, or you will not benefit from this. Why? Basically, downstream guys, they make their money from the volume of people pumping petrol. If anything, if crude oil prices were to go up and people consume less petrol, the downstream players may have losses, right? May have losses. So if we want to benefit from any upside of crude oil, invest in the upstream guys, right? So this is one of the petrol pumps, and one of them is Petronas, right? So over here, I think before I go to Q&A, I think so this will enable you guys so we can have a dialogue lah, basically, right? Get your questions ready, if any, right? Is that how does one even invest in this industry, right? Or how does one even take benefit from this, right? It's basically I'm suggesting maybe going into ETFs, right? So basically why I like ETFs lah. So we can see over here this chart, right? In 2 years, we can see that there's this ETF which actually holds upstream oil and gas players, right? So this ETF actually holds upstream oil and gas players. It's called XOP, right? I'll let you guys write this down. It's called XOP. I'm going to slow down quite significantly over here because it's very important, right? And one of the reasons why it actually rose is with the increase in crude oil prices. So remember what I said, in order for us to beat inflation, one of the strategy is to invest in companies that benefits from inflation. And the companies that benefit from inflation are the crude oil guys. Unlike the tech guys, right? Where you can see that it goes up and goes down, goes up and goes down, right? A lot of the tech guys actually went up, partly due to the money printing. A lot of money actually was flooding. And at that point in time, I still remembered, if we were to look at social media and we were to look at finance influencers, right? A lot of them were talking about Tesla, a lot of them were talking about Apple, a lot of them were talking about Google, so on and so forth. Not many people talk about crude oil. And if any of you guys were to join this particular webinar, this I think is something very different, basically, right? But the result speaks for itself, we can see, right? In 2 years, the ETF grew by about 120%, which basically translates 60% return per year, right? So how should we invest, right? Okay, so caveat over here, right? Is this, I always am a very firm believer of dollar cost averaging. We can never catch a particular asset at its lower price, and we can never catch an asset as it's going up in price, right? So I think one of the strategy over here is dollar cost averaging. So every time when we have a little bit of extra money, maybe we can actually put in this particular ETF. That's the first caveat, right? The first thing I want to say. Second thing I want to say is, please look at this as a long-term investment. If you look at it short-term, it's very difficult to make money, right? So look at it as a long-term investment. And the third thing I want to say is, tying up the whole thing together, right? Is that if we were to look at the bailouts done by the United States, right? Maybe 10 or 15 years ago, it was the bailouts, it was a subprime issue. What did they do? They print out money, right? And then after that, they flooded the market with a lot of money, right? And then the next one was the bailout, which happened during the whole pandemic, right? They printed out money again. So every time when they print money, money will be value less. It's just more and more paper floating around, right? And when that happens, basically, for a finite resource like crude oil, it will be more valuable, right? So in the long run, right, if the US continues printing money, this sector will have an upwards bias, right? This sector will have an upwards bias. So before I open it to question and answers, I want to say that this is one of our stock picks or our ETF picks, right? As I mentioned, you can go to your mobile if you want to right now, and maybe go to the app and type XOP and see whether it's there, right? And again, as I mentioned to you, buy it in small tranches. Please buy it as a dollar cost averaging. Whenever you guys have extra, you know, just buy. The whole thing of it all is looking at how things are going over there in the States, right? And looking at a possible collapse in the banking industry, basically, right? I'm not sure whether it's going to happen, whether it's not going to happen. I'm not sure. But one thing I do know, every time when there is a bailout, it seems to be that they print money. And when they print money, this will cause inflation, right? And one of the ways to invest so that you benefit from the inflation is crude oil, right? So before we end, I want to say that next week, I'm going to talk more about stocks that will benefit from the increase in inflation, right? I'm going to talk about the upstream guys. So for those that want to have a very safe and stable portfolio, right? I think buying an ETF would be, it gives you a big good mix of oil and gas guys, basically, right? At the same time, it gives you the nice upside, right? But if you guys want to have more alpha, or basically what I'm trying to say, if you guys want to make more money, basically, focusing on single stock can help, basically, right? But one thing I need to caution you guys, single stock also, if there's a drop, right? They also impact your portfolio, right? So next week, we're going to talk more about single stocks. What stocks will benefit from what oil and gas stocks that we like, right? And if there's any questions that you guys have today, if I cannot answer today, what I'll do is I'm going to talk about it next week. I think the next webinar will be on the 22nd, right? And with that, I think we'll just go in the question and answer segment, I guess. Right, so I've answered you, Andy, a while ago. And Muhammad Abu, what types of classes of airlines? Yep, anonymous attendee. Will crude oil be affected by the green movement EV? That's a very, very good question. That's very, very good. Okay, so right now, there is the EV coming into play, and Tesla is one of the EV players, right? So a lot of people are saying, would EV impact, or would it be value disruptive to the oil and gas guys, right? So the thing which I like to say over here is basically for things to move towards a certain direction, right? It will take years, basically, right? As of right now, gas is also used to energize everything, even the lights that I'm using, and so while EV could be a threat to the oil and gas guys, it will take some time, right? Thank you so much for the question. Okay, Andy Chi is asking me regarding ESG, do you RE renewable energy? Okay, do you think renewable energy will take a more dominant role in the future compared to the oil and gas guys? I can actually see a movement, Andy. Thank you for again for this question. I can actually see a movement within the renewable sector, right? We can see that there are players which are listed and they are moving towards the renewable industry in a big way, right? And we can see that solar panels are getting cheaper, and for it to produce a lot of this raw materials for us to extract renewable energy is getting cheaper. So therefore, when it gets cheaper, this will enable this renewable energy sector to be very viable in the future. Thanks for the question. Thank you. So Said Matzay is asking, there seems to be a continuous downtrend for crude oil for the past year. Okay, what's the outlook moving forward, weeks, months ahead? Okay, so basically it's a very good question. Thank you so very much for that question. So that's why I said do a dollar cost averaging, right? Because with the way the states is printing out their way out of every apa tu, crisis and also every collapse, right? I can see that money will be valued less, basically, and I foresee inflation is going to play a very big role moving forward in our daily lives, right? I can see harga sayur and things are getting just very, very expensive, right? So I think with inflation happening, I think this will be a good hedge for inflation. And another thing which I think will be a good sector to look and invest in is probably farming, right? Right now there's a movement towards vertical farming, and there's so many new practices, and also there's automated farming, and also, so I think these are the two major sectors to invest in, basically, right? So if crude oil prices were to go down, as I mentioned, just do dollar cost averaging, right? So that you can get it on the low, and then after that, it will eventually go up again. And why I'm actually relatively bullish, like I said, you continue printing up money, right? Inflation, and when inflation happens, crude oil will go up. And when crude oil goes up, that's when you guys sell, right? Anonymous attendee, what's your view on Sapura Energy? What's your view on Sapura Energy? Okay, so with regards to Sapura Energy, right? Basically, one thing about the oil and gas industry is that we need to take a lot of debt to be in the industry, basically, right? So if you look at the ships and you look at even to extract oil, right? There's this rig, it's millions and millions of dollars, basically, to build the rig, right? So to masuk within the sector is sangat mahal, right? Number one. And number two, Sapura has been struggling with debt, right? So as a business, if you are struggling with debt, and if you don't have that much of cash flow, right, it's very difficult to make an investment case for that particular company. And hence that's why Sapura Energy actually is trading at that particular price. But I think moving forward, if you're really interested, maybe look at whether they're going to get any new contracts moving forward. But this one, I'll be very cautious because their balance sheet doesn't look so good, right? They have too much of debt, and they have their cash flow also looks quite, basically, in other words, it's like the company is not doing the best, so that's why a lot of institutionals, right? They're not really looking at it. Okay, so one Muhammad Rushdi is asking, is the solar energy, will it replace conventional electricity in the future? At this point in time, because to build solar farms is expensive, right? Not anytime soon, but as the manufacturing costs to build the solar panels get cheaper, right? Definitely, right? So, I mean, like when Uber came into Malaysia, no one would have thought that this would totally disrupt the industry, the cab or hailing industry, right? But within 1 or 2 years, the whole industry just changed. So with technology happening, right, anything can happen, right? Okay, so one is also asking, some bank stocks in the downtrend nowadays, is there an indicator our market will come to a crash, right? So with regards to what's happening right now, right, as I mentioned to you, Malaysia is an oil and gas producer, basically, right? And with Petronas making quite good profits, they tend to pay tax to they definitely pay the tax to the government, right? And this tax in turn actually helps the rakyat. So basically what I'm trying to say is that we still have a buffer, and the buffer is Petronas, right? And they made really good profits this year. So the downside of the banking stocks is basically the sentiment lah. When SVB actually got a major sell-off, people got spooked, and the whole finance industry, not only in the United States but also Malaysia, got a sell down. So it's more of a sentiment thing, right? I wouldn't think lah Malaysia would collapse. No, I don't think so. So Said Mazé was asking. So I think this last question is really 9:33. I had a lot of fun actually doing this particular webinar, right? So sometime in April 2020, futures was negative. I don't understand the position. What does this mean, right? So I'm not much of a futures guy, Said Mazé, right? So I can't quite answer you. And yeah, I'm more of an equities guy, more of stocks, right? So you talk to me about US stocks and Malaysian stocks, I will be able to answer you. Futures, not so, and options also not so. So I truly apologize for that, right? So guys, I think we already did all the questions, right? I sincerely had a lot of fun doing this webinar. I hope you guys also enjoyed this particular webinar. And I hope you guys actually got some ideas, right? If you are worried about, what to invest next, the tech sector, it looks very volatile, should I even continue keeping my money in the tech sector, right? Or if you're wondering like, hey, my ASB and also my EPF not giving me that much, right? So one of the things which I'm saying is maybe nibble a bit in the oil and gas sector, basically, right? I think this one will give you a nice protection against inflation, right? And as someone commented a while ago, right? Right? He says that, not one. Someone commented about oil prices going down, right? He says, should this be a good time to invest? I think if oil prices were to go down for a little bit, it's even a better time to invest because you want to actually get something at a discount, right? And if you ask me what my view is in the sector, in the long term, definitely is going to be a long-term buy. And one of the reasons why is there's just too much of money being floated in the market. And there's no way, and as we can see on our daily lives, right? Inflation has just become our daily part of our lives, right? Harga sayur pun January naik again. So it's scary times basically, right? So thank you very much. I've learned something from you. Thank you so very much for coming. Thank you so much. I really enjoyed it, right? So next week on the 22nd, we're going to have another webinar. This time we're going to talk about stock specific, right? Today, the key takeaway is look at XOP as ETF. ETFs are very diversified. It will give you the protection against any downside risk. At the same time, it will allow you to get some upside from the increase in petroleum prices, right? Next, we're going to talk about stock specific. And this one, if you want to take a bit more risk, if you feel that, wow, I want to invest in upstream guys, which is mid cap. Me and my research assistant, right? We've been looking at certain mid cap stocks, 200% easily, right? So if anyone is interested, please do come. And with that, thank you so much for coming for this webinar, and have a good evening, and have a good evening. Take care everyone.